XRP was struggling to hit its target range yesterday, and it has seen a little bit of a drop to the downside whilst we see Bitcoin continue to push a little bit higher. In today's video, we are going to be taking a look at the technical analysis on XRP, and I'll be sharing my thoughts and opinions as to where I think that price action is heading next. Let's jump right down into the charts though, guys, and take a look at what's going on. So here we have XRP paired up with USDT. We're on the 1 hour Binance chart here. The target range that we were looking for yesterday was 59,048 to 60 cents flat. We were basically looking for a double top situation with where we were on Saturday, and unfortunately we've tried to push a little bit higher, and yesterday we did get a high of 59.34 cents. This was after finding support on the kind of 50 EMAs and 50 SMAs. Okay, so been great area here, but we have of course broken down quite a bit now, and this is an impulsive breakdown that we need to just be a little bit careful of. Now it's possible that our wave 4 here is in some kind of irregular flat, and I do think this is a true possibility based on momentum. So if we take a look at this, what am I talking about here is a potential finishing structural point to the downside, where we look for somewhere between 57.17 and 57.42. Okay, I'm going to draw a little yellow box right inside here so you guys can see what I'm looking at. Hopefully this will then coincide with support being found on that 200 hourly EMA. And this is where we look for the long positions. Okay, and the reason for that is we have a kind of 5-wave drop in here looking like this. Okay, now within that structure, it would be a irregular flat, A, B, and C like so, and that is your wave 4. Now, in this particular case, it would overlap with the wave 1, so we would be looking for this to be a diagonal-based structure within our end, 5th wave movement, which will be an ending diagonal. So we will be looking for, the typical kind of wave 5. So a double top really is still on the cards here, and we will be looking for a very interesting structure to kind of finish this off. I would be looking for 59.54 to maybe 60.16, but ultimately our structures here are indicating that we want to be thinking about the long positions a little bit deeper. Now it's possible that maybe we've already finished, so it depends on your appetite for risk. If you wanted to go into a market entry, how would I do this? Well, I'll be looking for stop loss lower than the 200 EMA, and of course we'll target out that double top situation. It does still get you that 1.92 risk reward ratio, assuming that you have a stop loss at 56.93, an entry at around 57.97, and take profit at 59.97. Essentially, that's going to be a 1.92 risk reward ratio, which will be a great trading opportunity. It hits all those kind of minimum thresholds that we would normally be talking about, and could be a great way to kind of take advantage of some of the volatility that's going to be in the market today. Ultimately, though, once finishing and a little bit later on in today, I think the shorts are the ones to go for. I expect extreme volatility here, so we ought to be very, very cautious with this one. So we've got lots of options in terms of how we might want to do this, but a nice wide stop loss I think would be critical. Definitely higher than the previous swing high on the zoomed out view. So we'll be looking for anything really higher than the kind of 53.1 range. And of course, we'll be targeting out quite the move to the downside. Minimum risk reward ratio, of course, 1.5, which would put us at approximately the range of taking profit around 54.95 on that one. Okay, so again, this is where the extreme volatility and the potential bigger moves in the market are going to be seen later today with the FOMC and the Federal Reserve's interest rate decision, the speech that will happen afterwards. So 7 p.m. UTC +1 for the decision, and 7:30 p.m. UTC +1 or UK time will be for the speech, and there's going to be extreme volatility during all of that. So there's a couple of opportunities here to kind of go long into the decision, and then I think a short on the decision and on the speech of the decision. So we got a lot to kind of consider here, and lots of different ways to kind of be trading when it comes to XRP. Talking about trading, are you ready for an exciting opportunity that you definitely don't want to miss out on? Imagine this: signing up to a top-tier cryptocurrency exchange and getting the chance to get your hands on a brand new iPhone 16. Yes, you heard that right. BingX is giving you that chance. BingX, one of the leading cryptocurrency cryptocurrency exchanges out there is running an incredible promotion right now. For all you new users just signing up and trading, you'll be entered to get a chance to get your hands on an iPhone 16. I mean, who wouldn't want the latest iPhone in their hands, right? But wait, that's not all. There's also a fantastic offer of up to 90 USDT for completing simple tasks on their platform. So not only could you walk away with an iPhone, but you could also stack up some crypto for free just by using their platform. That's a win-win situation. Here's how easy it is to get started. Sign up on 𝗕𝗍𝗃 using my special referral link in the description down below. Complete some simple tasks to unlock up to 90 USDT. Trade on 𝗕𝗍𝗃 futures and cross your fingers on that iPhone 16. And while you wait, start exploring some of the amazing features of 𝗕𝗍𝗃. Don't wait around. This promotion is only for a limited time. Click the link in the description, sign up on 𝗕𝗍𝗃, complete those tasks, and maybe you'll be the lucky one walking away with an iPhone 16 and some extra USDT in your wallet. Who's in? Take action now and get yourself into the 𝗕𝗍𝗃 rewards. So on our daily time frame, that's kind of on the hourly time frame, that's kind of the thoughts, right? And it does look like we have more volatility to be seen here when it comes to XRP. Now, if we roll this up into the daily time frame, the daily time frame, of course, is still in that bullish structure, but we are finding the rejections right on that lower upper trend line, and it has still got lower highs on the daily time frame, higher lows and lower highs. Right, we are still bullish on the breakout towards 75 to 85 cents. The problem that I have here is that I don't think it's likely to happen right away. And with everything that's going on with the FMOC, my expectations are that maybe we even lose the 50-cent level and retest the lower trend line. Maybe even reset it altogether before we get into these bigger breaks to the upside. Our momentum on the daily time frame is indicating a very interesting time, as in we can, of course, see a little bump to the upside. So maybe for the next couple of days, we do hover around the idea of actually being more stable in these higher ranges. But essentially, I do feel that we're going to see more liquidity exiting out of the market because we are in a bit of a liquidity crunch time in the market. And this is not what people want to talk about, not what people want to acknowledge, but it's quite clear that there is an insufficient amount of liquidity in the market. Not enough demand, not really enough people coming in to buy, and actually there's going to be an increasing selling pressure as time progresses. There's lots of different metrics that we need to keep an eye on, not just momentum-based indicators, but you've got your interest rates, which we're going to have the decision on whether the US Fed are going to pivot or not. We've also got unemployment rates, we've got the M2 money supply. All of these things are very, very important to keep an eye on. I know I don't talk about them in the videos here, but obviously they are real key indicators that you need to be paying attention to in order to understand the bigger, broader macroeconomic climate so that we can be more predictive over where the market is likely to go. Okay, so this is the same kind of scenario that saw us leading up into that peak that we had at 93.8. We were plotting it out. We didn't know the grounds and the reasons and the rationale as to how we got there. Obviously, we had a great move in July of 2023 due to some of the things going on with the SEC versus Ripple, and that kind of pushed us right up into our targeted range back then. And now I'm talking about the ideas here of potentially pushing up into 75 to 85 cents, but there's still this idea as well of also moving down lower before we have those breakouts. So we just need to be very aware that there's a lot going on in the background outside of the technical analysis that you can see inside the charts here. The charts indicate and hint at things, but you've got to pay attention to those Federal Reserve interest rates. You've got to pay attention to the unemployment rates, and you've got to pay attention to the money supply as well. If we want to see more liquidity, the money printer has to obviously turn on, and there is a delay before that money trickles down into the hands of the people who are going to be deploying it. Okay, so it's important that we see the money supply increasing, which we are already seeing, by the way, but we also need to allow a decent amount of time for that to filter down. The interest rate decision is a key moment in time as well. It's going to indicate to a lot of institutional players that it's almost time to go back into risk on assets. Okay, a pivot like that is going to be a key indication for institutions, and of course retail investors who are paying attention will be able to take advantage of that as well. So we are getting closer and closer to the point where liquidity is going to come flooding back into the market, and that's where we start seeing these bigger price movements for the cryptocurrency market as well, right? We saw massive interest rate cuts back in 2019, so starting in June of 2019. which ironically you can see here inside the charts, right? We see the basically the extraction here as we start to see the interest rates drop. And we also saw interest rate cut to zero in March of 2020, right? And that is really where the money supply really starts to ramp on up. It starts to trickle down and people can start deploying it. Now, obviously, with everything that was going on in 2021, 2020 with the lawsuit, XRP's price action has been suppressed. But with all that coming to an end, I do believe that we're going to see a really good surge to the upside, maybe even on the anniversary around the 4 years of the SEC versus Ripple. We are still targeting out $5 to $12, well, $5.59 to $11.25 based on the 28-cent low. It's still possible, as I have drawn out here, for us to drop down and retest some of these existing lows. So, lower than 33 cent will be basically right where we want to be buying into massive positions on XRP, in my opinion, ahead of what happens next. A lot of people are concerned over bear markets, but I've been through this many times already, but I'll go and talk about it briefly right now as well. Essentially, 1 year after the US elections, so in the US election of 2020, 1 year afterwards, we had a bull market peak. The election of 2016, we saw 1 year after the bull market peak of 2017. If we go all the way back, we can see 2012, we saw 2013 peak, right? And so when we start thinking about all the kind of US elections, how they are kind of forming, we have a US election here in 2024, 2025, being a bull market peak, right? There's no bear market to be seen here. We are just literally going through a bear market rally, essentially from the lows of 2022 and 2023, going into a fantastic run. I've been through this many times before. If you haven't already caught up, do go ahead and jump into our Discord server. There's a lot of resources there to help you guys understand what's going on in the background outside of just technical analysis or outside of some of the wild speculation that you find on X, for example. But yeah, I think we're in for a lot of volatility today, some massive trading opportunities today. And yeah, you can let me know what your thoughts are on all of this in the comments down below. And if you haven't done so already, guys, check this video out right here. It's not one you're going to want to miss.